La neta con Larry Navarrette.
Welcome to Sports with Bottom Line Larry. Never mind, it's not Sports Nation. It's the Bottom Line with Larry Navarrette. Episode number 5, Larry.
Four?
Five. It's 5. Episode 5. On episode 4, we were talking about credit, Larry, about co-signing and all that other great stuff. Why to do it, why not to do it, how to get that off your, for it not to count against your loan. But Larry, let's continue talking about credit a little bit. It's very important. A lot of people care about their credit. There's a lot of businesses out there trying to say they can better your credit, make your points go up in a couple of weeks by paying certain stuff off. You talked about percentages, about paying your credit cards off, the limits on them. Let's talk about buying homes and how credit impacts that.
Okay, once again, I'm Larry Navarrette with the Long Street Mortgage. My NMLS is 37062. Let's talk about credit. I'm going to, not too much about your credit. I'm going to give you examples about my life. Everything is going to be about me and my life, not about me personally. Well, me personally.
It's all about you, Larry.
It's not all about me, right? It's about me, what my experiences. Because I can't tell you when people, I heard. No, I'll tell you about me, my personal experience.
Yeah, people relate with your stories. Yes. At least you're putting an example
I'm going to give you an example. I can't recommend you something that I haven't been through. Okay. I think that's been my kind of like my whole guidance, right? Whatever I've been through, whatever the good and the bad, I'm going to recommend you and why yes or why not in different situations. And ultimately, you're going to make the decision. What I'm going to talk about today is the credit, not as far as your FICO score and stuff like that, because we talked about that last episode. The credit I'm going to talk to you about today is how or why you should buy certain things under your name only.
One name.
Okay. So, for example, me, we right now, and this is my dum-dum. I have 5 auto loans.
Auto loans, okay.
5 auto loans.
All right.
My wife and I, and then we have an extra vehicle and then $2.
Okay.
Okay, so we have 5 auto loans. Not at one point do all 5 are under our names, both of my wife's and I's. 3 under her name, 2 under mine.
We talked about co-signing before.
Yeah, but this is
now
not...
We're talking about you guys are married
yes, we're
you guys
married
are
and
not
everything.
on the loan together.
We're not on the loan together. Why? Because when you pull my credit report, only 2 cars come up. So whenever you have something under both of your names, I like to think that you're getting dinged twice.
You're splitting...
Both of them. Say, for example, if I have don't get scared, okay? Let's say I have a $1,000 payment,
okay,
right? $3,000 car payments. When they pull my credit, they'll see $1,000, right?
$3,000.
$3,000. So that hurts my ratios.
Okay.
Right? Now, now I have those cars, my wife doesn't. So when they pull her credit, they won't see those 3 car payments. Even though we pay them together as a family, they don't come up under her credit report. So a lot of people think, so it's not like, your car payment is $1,000. It's both of you guys in the loan. She has $500 and you have $500. No.
It's because the loan is just under your name.
My name.
Okay.
Yes. So it doesn't come up with her. How does that help you? When she's going to buy a home under her name, these auto loans don't come up. The same thing for a home. I always tell people, don't buy a home. If you could avoid it, you could be on title, don't be on the loan.
So some people are on the loan together because they need each other's income.
Yes. 90% of the time, you're going to need each other's income. But if you don't, right, if you're on your second home, rental or whatever, or your primary home, you don't need to be on the loan. Don't.
How about if you refinance? Can you just put one person on there?
Yes, as long as that one person qualifies, go for it. It's harder on homes to qualify.
Okay.
But on cars, I don't know. I've been buying cars for the last 20-something years or 30 years. I don't remember the last time they asked for a pay stub.
Okay.
Right? And it has to do with your credit, right? So as long as you have good credit and everything, me and my wife have no credit cards together. No auto loan together. Not even a home together.
You guys are separate but equal.
Separate but equal. But that's just on the credit report.
Okay.
Right? So it's very important. So how does that help? And if I mess up on that car payment, it messes me up, me only. It doesn't mess up her.
It doesn't put a ding on her credit.
It doesn't put a ding on her credit. What are we, 24 and 09 or 08? I had a foreclosure.
You lost the house.
I lost a home in California.
Okay.
So what did that did? It messed up my credit only. It was only under my name. Now, my wife, when we moved to Yuma, where we're here in Yuma, she was able to buy under her name only.
So that house, the one that you lost in 2009, you guys didn't buy it together, or?
We bought it. We were husband and wife, but she quit claimed it, meaning I want nothing to do with the house.
Okay.
Now, back then, I don't know why I did it. I forgot why I did it. I mean, she had better credit than I did, but I don't remember the situation why we did it like that. It just happened, and that's when I learned.
Did you refinance, or?
Yeah, actually, she bought under her name first because I remember when we got married, I was a broke college student, and I was a guy. I didn't care about credit, so I had bad credit. So when we got married, she got under her name only, and then when we refinanced, I did under my name only. I don't know why. It just happened.
You had fixed your life, Larry.
Yeah, I had fixed my life, and she helped me fix my life. So, but I don't know why I did it. I honestly don't remember why I did under my name only. So that situation that did helped us out in the future because now she was able to buy under conventional loan, not using me, even though we're married. So I had that for 7 years in my credit report. Right?
That foreclosure. 7 years.
7 years. 7 years.
But it didn't affect her at all.
It didn't affect her at all.
And you guys bought another house
And
under
we bought
her name.
Yes. Mm-hmm. And then we were able to buy a couple rentals under her name. So and then once those 7 years came up, I was able to buy again. So right there, I learned, I'm like, why the heck would we ever buy anything together?
Is that how long? Well, you got a good point. And why would you?
Why would I?
Because you guys can play
exactly
with two different banks.
Yes, or with a bunch of, but they don't see each other. And even though they see it on the taxes, the credit, they can't put it together because I'm not on that title. I'm not on that loan. That is not my house.
Now, when you lose a house, how long does it take for you to reestablish to buy a house?
It just depends on what type of loan. Okay. 2 years is your FHA, USDA, and BA. I believe it's 3 years, but most FHA again is 2 years. Conventional up to 7 years.
Okay.
Especially like if you're buying a rental property, definitely 7 years.
Will it give you a higher interest rate? Will it show that you lost a house?
After 7 years, it doesn't.
Okay.
So it's either you do qualify or you don't. And then your credit score is going to your interest rate and stuff like that, or what kind of program. But you can't buy an investment property if you have a foreclosure within 7 years.
Or for investment.
For investment, yeah.
And for a primary, you can buy it.
There's some with, like I said, FHA 2 years. Excuse me. There's conventions with 4 years.
So I mean, it's stuff that happens to a lot of people. A lot of people lost their homes years ago.
Even a car. You know what I mean? If you have a car repossessed, right, and you owe the bank, you bought it for $40,000, you still owe $30,000. By the time they repo it and they pay the tow fees and all the junk fees, I shouldn't say junk fees, right? All the fees, you still owe $40,000 again, right? And they sell it for $20,000. You have a balance of $20,000. They could go after your paycheck or whatever. Usually they don't, but they'll put it on your credit report. You have a repossession and you owe $20,000. And if it's under your name only, your wife's credit doesn't affect it.
Let's talk about. You know what? You brought up a really good point. I think we have never touched bases on that. Arizona is a garnishment state?
Yes.
How about California?
I'm not sure. I don't know. But I have seen it in Arizona in 20 years. I've seen it twice where they went after the person's paycheck for a car. Okay. And on the other one, they gave the person a 1098.
So how much, from what I understand, they can take, 33% of what you make?
I have no idea. I don't know. Okay. But I remember a coworker was paying monthly, garnishment from his paycheck. Check. And that's what they call a recourse loan versus a non-recourse loan. On a home mortgage, right, whenever they foreclose on a home, that's it. They can't touch nothing else. You're done.
Okay.
If you owe the bank $400,000 and they repossess your home and they foreclosed it and they took it back and they sold it for $300,000, the bank took that $100,000 loss. They ain't going to see another penny.
Even if it's an investment property?
A little different there.
Oh, okay.
I don't know all the technical rules, but that's a little bit different, right? I have seen credit cards and I have seen banks, auto loans, where they come after the people. I've seen it twice in 20 years.
Yeah.
Very rare. Right?
But it happens.
But it's happened.
Yeah, that's what they got collection agencies for and all that.
Yeah, but that's what I'm talking about. Credit. If you can avoid it, don't buy together. And in my culture, right, or the Mexican culture. I'm not even going to say Hispanic. On the Mexican culture, it's always going to be like, oh, it's nope. I want to be on the loan too. I want, and I tell. I mean, I don't want to causing issues or anything like that. But mostly women, no. They're saying is, yo también quiero estar en la casa. And I'm like, you know what? Just be on title. You don't have to be on the loan.
So you can add yourself to the title.
You can add yourself to the title, $40, $30, I don't know, whatever it is.
And
right?
you don't have to be connected to
You don't have to be
the
connected to the loan. No.
Yeah.
You don't have to be connected to the loan, you know.
Well, I don't think it's just the Mexicans, but I mean,
I'm just, you know, just
what is the difference between Latino, Hispanic, and Mexican?
I have no idea. I don't know. I guess whatever you identify yourself right?
Yeah.
I remember when I was in school or in college, it's Hispanic. Oh, it's, you know, it's a bad term because it's panic.
Yeah.
It's his panic or her panic, and I'm like, I don't know. Just grow
his
up.
or her.
His or her panic. You know what I mean?
Somebody's panicking.
Yeah, somebody's panicking.
The point is not to panic and not to get the loan together.
Don't. If you could avoid it, don't.
Okay.
Auto loans, credit cards, department stores, and everything. Just do it separately. Don't mess up that. If one person gets messed up credit, you don't want both. You just want one person.
Okay.
House, it is a little bit more difficult because of the qualifying, you know, the income and stuff like that. If you can avoid it, go for it. Avoid it.
And if you're going to be an investor, well, apparently you have some type of...
If you're an investor, definitely separate. And remember, on paper, you're still together. You're still both owners. Just on that loan, you're not.
Okay. Which means you guys can go get a loan from other places.
Because remember, on the Freddie Mac and Fannie Mae, you're only allowed to have 10 investment loans.
Okay.
So if you do everything separately, she could have 10 and you could have 10. So now you could have 20 investment. 20. Versus if you bought it together and you do every loan together,
you only have 10.
You only have 10.
Well,
so those are the little benefits, you know.
Little tricks, little lessons, stuff you learn from Larry and from
like
his life.
You get it. You get the whole 9 yards, and you know, I do the loan,
foreclosure and everything.
I'll give you. I mean, I've said it from episode 1. I've done it, and I'm trying to keep you from doing it, from the bad mistakes that I've done.
Yeah.
Right? Or mistakes, life lessons. I can't say mistakes.
It's not mistakes. We learn. Lessons. Yeah. We learn and grow.
I think I mean, if you make the mistake, whatever, and you learn from it, it's really not a mistake. It's a life lesson, and you moved on, and now you're doing something different.
Your prediction, Larry, who's going to win the Gold Cup?
USA.
USA. All right.
USA. I mean, if it would have been tomorrow our episode, I would have been wearing my USA jersey.
Well, we'll see if Larry hits it on the spot. This episode will probably be out by the time we get there. Guys, contact Larry. Where can they find you, Larry?
You can find me at Lone Sweet Mortgage. My phone number is 928-785-2451, 928-785-2451. Any questions you have, man, just in general. You know, it doesn't even have to be about a house. Like I said,
recipes, food.
No, recipes. No. When it has to do with credit or stuff like that, and like I said, everybody.
Soccer, he knows it. Yeah.
People ask you, "Oh, my brother, my sister." You know what? Their situation was different. I don't know.
Everything's different.
Everybody has a different situation.
Yeah, there are different spices in the recipe. Guys, his contact information will be down there somewhere. Once again, it's his sidekick, Aaron Rubio, producer at Farmers Insurance, Valentin Guzman. I'm always happy to be here with Larry and listen to his great adventures and stories and predictions.
Alrighty.
Guys, follow us on Bottom Line with Larry Navarrette in weeks to come. Thank you.
Thank you.
Ahí está el de English.